Alright, top-down analysis. Daily really didn't tell me much other than the fact that I was actually trying to short YM first just because it was the only index that actually respected the 50% of its wick from Friday. So this is normally where you want to frame a bearish day from. This is what I mean by aligning a bearish daily profile. If we go into the 4-hour, this is all I was looking for. The 6 a.m. candle swept the previous 4-hour candle high, and then I just immediately dropped to a lower time frame because I already knew what I was looking for. And so in this case, I went straight just to the 1 minute because the 3 minute wasn't really offering anything. Um, this could have been your CSD right here. But we always talk about volatility injections, right? Here's 930. Price opens high, sweeping this relative, this short-term high, and then just breaks lower, right? And it's so much clearer on the 1 minute. This is where my invalidation point was on YM, and this will make this red. This was the previous 4-hour candle high. So this is my new invalidation point, right? And then 930 confirms what I'm looking for, and the continuation signature would have just been either entering off of this FVG, or in this case, the 1 minute change in state of delivery, which we never got a retest of. So I had to let this end up going. So I missed this. I was trying to short the weakest asset. That's normally what you always want to be doing. You'll have the least amount of drawdown and the cleanest moves. So I missed this. So what did I do? I went to the second weakest asset, which is ES. I'm not shorting NASDAQ because it was the strongest asset. Um, Daily really wasn't telling me much. When I mark out the 50% of the wick, it was pretty much invalidated. At that time, this is how price was looking. So we were already above this, and it's not ideal, but you can still frame a valid trade like this. So when I played price, obviously this entire down close candle wasn't here yet, but we did have what the sweep of the previous 4-hour candle high. And so what I'm looking for is this SMT with all-time high to hold, and that is where I looked for a protected high to trade away from. So this is what I mean. I used the 4-hour like it was my daily chart today. And from the 4-hour I went straight to the 15, and I noticed that we got the first potential reversal signature, just the candle closures below the last up close candles that took out a form of liquidity, and then that is where the SMT with all-time high had formed. So to me, I'm already looking at this 8 a.m. high to be protected. How do I know that I'm now going to have another lower time frame swing to trade away from? Fair value gap gets created. We up close candles rebalance it. Then we get another candle closure below here. This to me is all I need to see that I'm on side. But if I would have waited for this entire candle to close, this is what's confirming the trade idea for me. So obviously I don't need the 15-minute setup to get retested. That's where we go for the lower time frame. So now we have another new protected swing high. And also, what do you notice? This high is formed before what? Our volatility injection, which is 930. Price is this is that high of the 15-minute second change in the state of delivery. So we trade away from that at 930, giving me a new protected swing to trade away from. That is the whole entire point of trying to find a protected high and low. This is our invalidation point. If we move through this before I get my continuation signature, I know that I'm offsides or it's going to just be a terrible day to trade. So what did I do? Went down to even a lower time frame, and if we break this down to a lower time frame, you guys can see exactly what's happening, right? Last up close candles, that's rebalancing a fair value gap. So now we have a lower time frame order block, which is that same 15-minute order block. You guys see what I'm kind of showing you now? But we're doing this all in a lower time frame. So instead of waiting for this candle, this 930 to close at 945, we can use the 3-minute to see here that 930 is validating this as a protected high. You can just short this here, but I typically don't do that, especially since it's so close off open. What do I wait for? I wait for a continuation signature. So I knew that I had London lows down here. And if we go the hourly, we have the new day opening price, which is that 18 o'clock candle, as well as the new week opening gap. But that's not really where my focus was. I was just worried about the new day open or the week open. So price does what? Leaves and trades away from this fair value gap here. And if we look at NASDAQ, what do we have? I don't know why this always changes, but We look at NASDAQ, what do we have? Well, we have an SMT gap fill. So you guys can see the stronger asset is poking into this 3-minute fair value gap and then does what? Gives a continuation signature through. Rebalances the fair value gap. Another up close candle gets closed below here. And then now you guys can see it's being used as resistance. We don't want to be shorting the stronger asset. So that is why I can now trust this high after we close below here to act as a continuation signature. And I'm trusting that this gap should stay open and this high should now be protected. That is all that this trade took place from. And we have a 3-minute fair value gap here. I chose to short the very low of the order block, which is at 780. Stop loss was here, 4.5 point stop. And my take profit, my TP1 was just 2R, right here at 771. And then I took off my last position at the new day opening price, or new week opening price, however you want to talk about it. And you guys can see this is where price ended up reversing from today. And you have to be conservative when you're entering a short position, especially when the daily is not really giving you a valid framework, right? That's kind of what I was trying to tell you guys. I was using the 4-hour chart like my daily chart, and you guys can see we pretty much sold the exact bottom today before the short-term reversal here back into almost all-time high on ES. So limit your expectations when you're trading against higher time frame order flow. These were very high confluence areas of interest for me when I'm, especially since again trading the second weakest asset, and we're TPing and taking off our majority of our position. Start trailing aggressively when we're at these really relevant areas where price can reverse from. So that's what I'm just trying to put across in front of you guys today. And if we look at NASDAQ, right, that same short really would have been miserable to hold. And unless you were all out at like this swing low here, you most likely probably would have got break even unless you just have balls of steel, right? So that same trade idea would have given me, would have been blue balled for 2R. And would have been stopped at break even most likely. So that is also another reason why it's important to pick the right asset. So missed my entry on YM, then moved the goalpost to ES, and used the 4-hour as my daily chart, used the 3-minute, I used the volatility injection to confirm what I was looking for, and then I used my continuation signature, trusting the SMT between ES here and NASDAQ and the gaps. New up close candle acting as resistance. If we're on sides with order flow, this should hold, and all of our targets were met.